All right. Well, good morning, everybody, and welcome to another fabulous day of learning about the market. I hope that you guys have been learning a lot of things. What I wanted to share with you guys today is a strategy that I have been secretly using for quite some time. I believe last month was the first time I actually publicly talked about it. It's a very, very simple strategy that I don't know if people have heard of or people know about, but my goal is that today, by the time we're done here today, at least you would see how to use this to kind of help you with your trading and investment. Okay. My name is Wally Olopade, just like David said. I've been in the market for over a decade now, almost a decade and a half now. And everything that I do is strictly based off of my own research, predominantly just I spend my days when I'm not doing anything, just tinkling around, trying to fine tune strategies, indicators, and stuff like that is what I find pleasure doing. And so in the process of doing that, I have been able to discover multiple patterns, multiple indicators, how to use them, which ones are better than others, and so on and so forth. Okay. And that's kind of how I came upon this strategy as well, which is how I come upon a lot of different strategies that I come upon. And I'm going to share this with you guys today. Here's our risk disclosure statement. I am not a licensed financial advisor. However, um, now that I've disclosed that, one thing I am allowed to do is just share with you some of the things that I'm doing and see if it works for you. Okay. Please understand that trading does involve risk. You probably heard this mantra over and over and over the last couple of days now, but it's something that we have to disclose, especially if we're not licensed financial advisors. Okay. But we can share what we know with you guys, and then hopefully you take that information, do your own studies as well, and see how you can incorporate that to your investment strategies. Again, we are going to be talking about something I call the monthly breakout strategy. So every month, I am looking for stocks that are going to break out. Now, this strategy was created to help me spot stocks that are typically going to break out above the previous month's high. Now, why is this important? This is important because once I know that a stock has a high from last month, so right now we are in November, I look for stocks that have, in October that meets these criterias. I know where their high is. So depending on where I get in this month, I have an idea of how much money I'm going to make already. And this is something that I try to tell people is like, if you do this right and you trade as a business, there are ways for you to anticipate how much money you are going to make every single month, every single quarter. And this is one of those strategies that allows you to do that. Depending on how many opportunities you see and how much capital you have, would then determine pretty much what your expected monthly income should be. All right. Now, this strategy is really, really good for those who are not day traders. So, if you're a day trader, this might not necessarily help you as much, but you can still modify this idea, knowing what's going to happen. Because again, if we know that last month the stock reached this high, then based on what you're going to learn here today, you'll realize that then that means this month, sometime this month, it is going to surpass that high. And so, with that information in mind, even though this is not technically a day trading strategies, there's nothing wrong with you saying, hey, I now have a list of stocks that I know are going to go so high. They have a target, and the chances of them reaching that target is very, very high. And so, because of that, if you then choose to come in every single day and trade, then that's one option. The way we do this is we just look for a stock that has hit a certain high, meets the criteria that we're looking for. We buy, we sit back until it reaches that high. And this is why I say it's a very simple strategy. Okay. The goal here is not for it to blast up to all-time highs, not necessarily. It's just literally targeting the high from the previous month. That's all we're trying to do here. So let me give you an example of what we're talking about. This is a pattern that I discovered. I first discovered this back in 2021. Um, I was at the time, I was actually in a trade, Bank of America. At the time, I'll show you that exact trade too as well. I was in Bank of America. I had not developed a strategy at that time, but I was in Bank of America and I was, okay, yeah, this looks like a good trade setup. And it was based on completely different set of rules at the time. I jumped into Bank of America, traded it. It did phenomenally well. It blew my mind. I was like, wow, there's a lot of money that I made off of this, you know? And I was like, man, how can I repeat this? How can I repeat this? And that's kind of like when I started studying, it's like any patterns that I could see. So here are some of the things that I saw. First was that I realized that when I switched to a bigger time frame, monthly time frame, uh, and I see stocks that are moving up 2, 3 months up and rally. Okay. They've been going down before, so you can see this is a stock that has been declining for a little while, and then it starts heading back up within the first 2, 3, 4 months when that happens. So you see it's been declining. Once it starts heading back up, there's an interesting phenomena that I didn't realize at the time that since then I have seen over and over and over is that the stock will go up 1 month, 2 months, 3 months, and then it takes a break. Okay. It pauses. And usually when that pause occurs, it occurs with a red candle. And so this is why I call this the rest month. And so after 2 or 4 months of rallying, the market would often, or the stock will often pause with a red candle on that monthly time frame, right? That monthly rest becomes the blueprint for the next move. And so this is what I'm looking for. It then creates this high probability setup where I now know the next month. So if this is January right here, when this happened, that means in February, the stock is going to surpass that high. That's what I look for. If this was right now in November or October, if this is October, I now know that in November, it is going to surpass this high. And so once I'm able to identify these things and these type of stocks, depending on how much capital you have, you put that into those and then just sit back and let it do its thing. Okay. So as you can see here, this is exactly what we're talking about. After the rest month, the candle often will break above the high, even if it's for one day, maybe in 1 week, it doesn't really matter. The fact is that even if it's for 1 hour, the goal is that it is going to reach that high, that previous month's high. And so this month right here, which is that green candle, that's what we start paying attention to. Does that make sense? So after the monthly rest candle, we usually would get a break above the previous month's high, and that's why we call this the monthly breakout strategy. Fair enough? The monthly breakout strategy. And once you see this, you cannot unsee it. Okay. After that, it's just a matter of learning how to trade this effectively, doing what you need to do, and so on and so forth. Okay, very good. So here's what Dennis is saying. He's saying, no way, nobody knows what next month will do. Okay. And I'm so glad that you brought that up because, again, this is where the research that I've been doing is try to figure out how to tell which ones are. There are certain things that you're going to see that's going to make that happen. Okay. And so it's not like you're just jumping in blindly. Does that make sense, Dennis? You're not jumping in blindly. There are certain rules that you create and then that I've created along the way. It's okay, if I see this, this, and this, boom, I know it's going to happen. The odds of it happening is very, very high. And if I don't see these things, hold back. Don't start acting just yet. But I kid you not, there are stocks after stocks after stocks after stocks after stocks that literally produce this. Here's another even interesting point. I like to do this on a monthly time frame, but guess what? This even happens on daily time frames as well. It happens on a weekly time frame as well. Okay, I just like the monthly because I don't have to do too much work. But even though we have no idea, I always tell people we cannot predict the future. But one thing we can do is read what the chart or the stock is communicating. Does that make sense? And so when it's communicating, yep, we are ready to go higher, then take action. But if it's not communicating that it's ready to go higher, you sit back. But you have an idea that this is what this stock is going to do. And so now it's just a matter of like, all right, show me that you're ready to do it. And once it starts showing you that, boom, you jump in. Also have rules and criteria. It's like just in case a black swan event occurs. So that way, say, hey, wait a second, we're not just going by this blindly, waiting for it to reach the new previous high or waiting for it to surpass the previous high, and then something happens, right? And then in the process of this happening, all of a sudden, wow, it didn't really work out the way we wanted to. Rather than sitting there blindly, there are some cues that you will see very clear as day, indicators that we use that is making it very, very clear. It's like, wow, okay, something is going wrong. It's not doing what it's supposed to do. You might want to go get out. You might want to go ahead and place your stop. But the concept here is almost always these stocks would do something like this, where it's like they take 2, 3, 4 months doing extremely well. Then all of a sudden it takes a break. Now, some criteria that you also might have to keep in mind is it works better on bigger mega caps type of stocks. Or, let me rephrase that and just say, if you're trading penny stocks, that might not happen. Okay. You have more failure rate on penny stocks or low volume type of stocks than you would with companies that are very solid in the S&P 500, the NASDAQ 100, the Dow. Without a question, those things happen all day, every day. Okay. But if you're trying to trade this new company that just went IPO 2 months ago or 3 months ago with only a volume of 50,000, not necessarily the case. Understood? So again, the idea here is you see the setup on the left, you expect the breakout to occur on the right. Here was Bank of America. This was the very first time I ever traded. This did not know that I was doing this at that time. Okay. And like I said, since then, this was back in 2021. Since then, I have refined this, added indicators, added guidelines, refined it and all that kind of stuff to make sure that we get into the best of the best of the best. All right. But here's what we're talking about. Stock starts heading higher. Okay. 1 month, 2 months, and then has this red candle. We now know that this is the high up here, close to $35. The expectation is that once we meet all the criteria we're looking for, we would at least reach $35. Okay. Now we're not going to all-time highs. We're not expecting that. We're not expecting it to. All we're trying to say is wherever we get in, we might get in somewhere here. We might get in somewhere there. We might get in somewhere here. Wherever we get in, once we know that our criteria are met, boom, we know that this is a high probability that it is going to reach that level. Okay. That is correct. So, that is to say, hey, I agree with this only if the following month rises above the previous months doing that trading month. Absolutely. And that's where the essence of this comes in, is understanding what are the things. But here's what I want you to see is the fact that, you know what? Hey, these things do happen. I can go back to, even this candle right here. When this candle came up right here, the very next month, it took that out. You can look at this candle here. Went up 2 months. We had the red candle, took that out. Okay. That's what we're looking for. Does that make sense? And then it's just a matter of understanding some guidelines that you have to implement to make sure that, yep, this is happening. This is why I said we have rules and guidelines to help us say, hey, yep, we see it ready to start rising above. And they're very simple things. Like, for instance, I'll give you an example. Okay, most people are not aware of this, but this is something you can go back and do some research on this. You'll find that this is true. Unless we are in a bear market, which most people don't even understand how to tell. Does anybody even tell? Let me just throw it out there. It's a freebie. What's one simple way that you can tell without question whether you're in a bear market or you're in a bull market? Like one indicator that can easily tell you we're in a bear market or a bull market. Anybody knows that? If you don't, just type in NA. Just make sure that I'm not talking to myself. But if you do, if you want to share that with the group, share that. Like one indicator that literally tells you whether you're in a bull market or a bear market. Because a lot of people get confused about this all the time. Okay? Nobody knows. Very, very interesting. Okay. All right. It's very simple. You use a 10 simple moving average on the monthly time frame. And as long as we're above the 10 simple moving average on the monthly time frame, chances are we're not in a bear market. Does that make sense? And if we're below the 10 simple moving average, chances are we head into a bear market or we already in a bear market. So going back to what you're saying, part of one of the criteria I have to look for, Dennis, is I say, hey, you know what? Whatever the stock is, it better not be below the 10 simple moving average on the monthly time frame, pure and simple. Because if that's the case, chances of it then surpassing the previous month, very, very slim. The 10 simple moving average. Okay, you have the 10 simple moving average. One of the best indicators to help you very, very quickly is just a rule of thumb. Again, it's not, you know, uh, definite and all that stuff, but very easily when people are like, oh, are we in a bear market or are we in a bull market? You don't know, is this stock bearish or is this stock bullish? Okay. One of the simple ways of being able to determine whether stock or market, like right now, if you were to ask me, is the S&P 500 in a bear market or bull market? We're in a bull market. One of the simple ways to figure that out is by using the 10 simple moving average on the monthly time frame. That's it. If we're above the 10 simple moving average, keep it as simple as that. Just remain bullish. If we're below the 10 simple moving average, chances are we're bearish. Okay. And so now when I'm applying this strategy, that's one of the factors that I, factor in. One of the things I factor in is that, okay, if I am going to use this and expect the next month to do well, I have a better chance that this is going to work as long as that stock is above the 10 simple moving average on a monthly time frame. Does that make sense? If you use this on a stock whereby it is below the 10 simple moving average, then chances are it is not going to work. So let me give you an example. I'm kind of going off my course. So Dennis, I fault you for this, but I think it's a learning experience. So let me show you something here. Give me 1 second. Here's the S&P 500. Let's go here to the monthly time frame. Okay. And let's go ahead and put on the 10 simple moving average just to kind of clear this up so that way we understand what we're doing here. So I'm gonna go here, let's put on the 10 simple moving average. Okay, very easy. All right. So it's a very simple concept. And this is something so simple, you don't have to stress yourself out over anything. Over the last 10 years, since 2016, as long as we're above the 10 simple moving average, market is bullish. Once we go below the 10 simple moving average, consider it bearish. We get back above, we bullish. Below, we bearish. Above, we bullish. Below it, we're bearish. Above, we bullish. Below, we're bearish. Does that make sense? It's a very, very simple concept. Again, you can, if somebody wants to be very technical about it, you can say, oh, but this and this and this. But no, in the grand scheme of things, just apply that, and what you'll find is you can see how life is so much easier. Just saying, okay, I'm not going to stress out. We either bullish or bearish. Simple. Um, Take any stock, for instance. Let's go with Nvidia, right? Most people, when Nvidia was doing what it was doing right here, now look at this. From 2023, Nvidia has been what? Nothing but bullish. Then it went bearish for quite some time. Then it came back into being bullish again. Take any company, I kid you not. Here's a company that everybody thought was going to do better than Tesla, right? And when I see something like this, it's like, you cannot tell me this is a bullish company because look at this. All that time that it was below here, it was bearish. Now that it's above, okay, we're dealing with something that is trying to be bullish. But prior to that, it was not doing so well. So does that make sense? And so again, going back to this again, this is just one of many, all right? But it's just understanding, hey, this concept that when a stock starts moving after it had declined for a little while, it starts heading back up, and then it takes a break, meaning that it's resting. chances are there are a huge chance that it's going to get back above that level. And that's all we're looking for. Does that make sense? And so even though I was not applying this strategy back then, but this is what caught my attention because that time when I was doing this, the stock price was going for $29.96. And what you find is like if you had, 1,000 shares on this, you'd have made a profit of that. But I traded the options back then. And this is why I said it blew my mind. I was like, wow, I made a lot of money off of this thing. And as you can see, the stock did what? Came back above that level. And it's the same one that we've seen right there, came back above that level. Now I traded that way past that. Okay. But again, I was just like, wow, how do I make sure that I get, because I remember that first month, this was in February of 2021. When that happened, I was like, wow, February was a very, very good month. I said, man, I need to figure out how to replicate this over and over and over again. And that's what started this whole thing. And so recently, Micron, we all seen Micron, right? Micron comes out, Micron is doing extremely well, blah, 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 right? Had 2 great months where it went boom, boom. And then what happened? It had bingo, the red month. That right there just tells me, oh, wow, there's a huge chance that next month, which would be in August, August should surpass that high that was formed in July. Okay. And so for 3 months, Micron had rallied almost 70%, pulled back in July about 13%. And this is why I said once you're able to identify these things and you have a list of this every single month, because you do this once a month, put your list together, find the ones, and say, okay, cool. How much did this one pull back? Oh, it pulled back 13%. This one pulled back 10%. This one pulled back 5%. This one pulled back 15%. This one pulled back 20%. Okay, now I have a list of 5 to 10 stocks that pull back anywhere from 5% to 20%. Great. Now it's just a matter of like, okay, now let's sit back, let's analyze this, let's go through our guidelines, making sure that this is the ones that we want. And once we get our confirmation that this is what we need, boom, here's one that can get me 15% for the month. Here's one that can get me 10% for the month. Here's one that can get me 20% for the month. Okay. No guessing, no hoping, no wishing. It's just the data's there. Once I see the data and the data shows me what I need to see, boom, go for it. Okay. So this is literally this year, a few months ago, saw this and said, okay, cool. All right. Now I know how much money I'm going to make in August, approximately anywhere from 10 to 13%. Easy. Why? Because from the high of where it was to where it ended, that was a 13% pullback. So now if somebody was to tell you, hey, how would you like to invest in a company where there's a high probability chance that you can get a 10 to 13% return on the stock alone? Absolutely. Very good. Okay. And so what ended up happening was because of this, the way we trade the options, we want to buy more than 30 days because again, we're expecting this to happen in the month of August. But again, if anybody knows the trade options, how theta decay plays, all that kind of stuff, is look, let's be careful. What about if we get some more insurance? And so instead of just 30 days, let's go, to the next month. So if I'm saying, hey, this is supposed to happen by the end of August. If I give myself to September, I still have, I'm not waiting to close out in September, but I'm just buying myself that time so I don't have to worry about time decay, so to speak, right? And then you have two choices. You can either buy at the money options or you can buy the out of the money options. Well, how do you determine where the out of the money option is supposed to be? What strike price do you pick? It's very simple. The strike price that's closest to the previous month's high without going over. That's what we're looking for. All right. And so you can either pick the at the money option, which hopefully you guys can see this. This was what 105 at the beginning of August, or we can pick the 125, which is the highest that Micron was in July without going over the actual strike price. Okay. You find those two, you buy those. The at the money would have cost you $980. The out of the money would have cost you $229. You've seen all the criteria that you need to see. The chances are high. And again, you don't even have to stay to the end. All we're trying to do, we're not trying to be greedy. Just saying, look, I just need you to hit the previous month's high. That's all I need you to do. And as long as you can do that, I'm good. Okay. That's what the game plan was coming into this. Now, here's the interesting thing. Even before you reach that previous month's high, chances are you will be making money along the way. But the goal here is with the rules, with the indicators, with the guidelines that we have, is okay, let's manage this. That's why I like, having to wait a whole month. I can see things. There are things that we can avoid. Like, let's say there's an FOMC meeting coming up. Pay attention to that. Okay. So if you're getting in before the FOMC meeting, oh, I might have to make some slight adjustments there. If you getting in after the FOMC and there's no major news announcement coming up, that's a whole nother ball game right there. If the stock has earnings coming up, or if the earnings is nowhere close to coming, or if there's no earnings that month, that's a whole nother ball game right there. But all these factors, you can weigh these factors in and decide, oh wow, I know where this is going. Chances are this is going to do better than that one. And then put on your trade. 12 days later on Micron, 12 days later, what happens? Notice what it did here. Notice that it actually hit the top, but then it came back down again. So this is why I said we don't get greedy. I don't want you like looking at this big old candle right here, because that's a whole nother ball game right there. Like that's beyond the scope of today's session right here. All we wanted to do was to say, hey, this is a stock that could move up 13% if we get in. You get in down here at the open, up here, you'd have made your 13% or a little bit more than that. But the option, notice that little wick went above it, boom, you did what you got to do, get out, make your money. 100% return, 12 days. If you went at the money, which is this, you went out of the money in that same 12 days, 199% return on your money. Rinse and repeat after that. I kid you not. Just rinse and repeat. Here's another one, NVIDIA. Okay. Stock's been going down for quite some time. Quite some time been going down. Now we get 2 months. Boom. All right, now we have an idea where the stock's going to be. This is before the split. With the high of that month was $187, right? We don't know just yet. Next month comes, we start looking for certain cues. Once we get the cues that we need to get, we know, oh, wow, it's in motion. Now that it's in motion, hey, here's the high of where the stock can go. So all we need to do now is, again, go figure out, I already know what the high is. How much is going to cost me? I can either buy at the money or go out of the money. Out of the money, taking, the concept of, I know where the high is, I know where it's going. If you want to play it safer, just buy at the money. Either way, this is what ends up happening. Okay. And it's because we know. And again, that's just the beginning. Okay. That is just the beginning. Again, all this right here, after the aftermath of that, that's a whole nother topic right there. Oh, completely different topic right there. But this is what I'm saying. These are patterns that occurs over and over and over that I'm not sure if most people before today even knew existed. Does that make sense? And it's a very simple, what I like about it is it's very visual. It's very visual. And that's why I was like, wow, this is pretty cool. Once you know this, whether you're a day trader, swing trader, maybe even a semi-long-term investor, 2, 3 months after that, wow, you now know certain stocks that has the potential to do well. And armed with that information, man, what can you do with this? That's the concept here. And so there's a motto or a saying that we have in our community. We say, we don't hope, we don't wish, we don't guess. What we do is we see it, we know what to look for, and then we expect things to happen. Not that we control the market, We have parameters in place so that if the market detours on us, we know what to do as well. But to be able to see opportunities every single month so that now we're not looking back in hindsight and saying coulda, shoulda, woulda, then this is something that anybody can apply. Dennis is saying, so these are sprayed treads. Is that correct? Actually, no. They're not spreads. They're not spreads. These are, I mean, you could make them spreads if you want, excuse me, but no. These are just flat out call options. Okay. I have one of my best students. He doesn't even like to buy call options. He just sells puts on these. Just literally made $500,000 within the last 4 months doing exactly this, just selling puts. Now he's a big time trader and all that kind of stuff. So I'm not going to tell you guys you got to go and make a 500 out of me. He has big money. Don't get me wrong, but $500,000 in the last 5 months doing exactly this. Okay. Each one is absolutely a separate trade. Correct. They are absolutely a separate trade. So that's why if you look over here, um, this one right here was this one right here. So this one by itself, okay, you bought it for 1,300. You're able to sell it for $3,415. That's a trade by itself. Or if you wanted the cheaper version, I should say, where because you already are aware that, hey, wait a second, here is a monthly breakout like Wally talks about. I know where this stock is going. It's met all the criteria that we need. It's showing us that the move has begun. Great. So then I can, oh, maybe I want to buy a cheaper version. And so if you bought the cheaper version, instead of spending $1,300, you'd have spent $227 if you bought the 180 strike. How did we pick the 180 strike? Because we knew that last month, NVIDIA's high was 180. Okay. It's okay, cool. So because the expectation is we are going to surpass that previous month's high, we can pick that. And in that case, if you chose that option, then you're talking about 294% return on your money. Okay. And again, this happens over and over and over again. Here's Oracle. Okay. Oracle 3 months ago did the same thing. Everybody loves Oracle now. But when Oracle did what it did, boom, 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 boom. See that? It's like we were loving it. Don't get me wrong. Totally different strategy. I have a whole nother strategy on how to identify market bottoms and everything. That's completely different from this. So we excited. Oh man, Oracle's doing phenomenally well. And then it starts losing, quote unquote, losing money. And people's like, oh my goodness, Oracle's gone down. It was at 260. Do you think it's going to continue going down? What's going to happen? This and this and this. And I saw this. I was like, oh my goodness, wait a minute. That is a breakout strategy. Oh, wow, guys, you know what this means. Yes, month of August wasn't great for Oracle, but guess what? September should be a great month for Oracle. So understanding this now, it's like, wait, let me prepare myself for the next month. Does that make sense? Let me prepare myself for the next month. You can already tell where the high is. It's okay, good. You can see how much it pulled back from like a roughly 260 down to almost 226. Okay. You can calculate that and say, oh, wow, that's how much it dropped, which means once it recovers next month, that's how much you can gain as well. And this is why I say every month before the months begin or before the month ends, you should have an idea of how much money you can make. Like I kid you not, you should have an idea. All right. Because once you go through your scans and you kind of pick, you say, wow, there's 10 stocks, 15 stocks, 20 stocks, 50, 60 stocks. You pick and choose whichever one. The problem you're going to have is you won't be able to trade all of them. But once you pick the ones you have, it's okay. All right. Well, this one dropped 12%. That one dropped 15%. This one dropped 10%. This one dropped 5%. This one dropped 7%. Which one of these am I going to choose? If you choose to pick all the ones between 5 and 7%, then just know next month, chances are, or this current month, chances are you'll make about 5 to 7% return on your money. If you choose to go with the 10, 15%, then you have an idea. I should be able to make somewhere between 10 to 15% per month. Does that make sense? And that to me is trading as a business. Okay. It's trading as a business. So now Oracle reached a peak of $258 at the end of August. Okay, cool. Now I know it pulled all the way back to 226. You bring out your handy dandy calculator. Let me bring that out and see. Okay, so we do this. Let's see, there's something here. So we say 258.49, right? That was a high, minus 226.13. Okay. So that's $32 drop divided by 226.13. And we talk about a 14%. You have the potential to get 14%. And I say potential only because it depends on when we get in. And so typically what I do is just half of that to the full amount, maybe slightly even more, but I don't overshoot. So I say, okay, half of that. So that means 7 to 14% return on the stock alone, by the way. And we're not even talking about leverage ETFs on these, man. Okay, that's a whole nother topic, right? So if you have leverage ETFs, totally different topic. We just talked about the stock alone could yield you anywhere from 7 to 14%, depending on when you get in and depending on how well you follow the guidelines. That's all. You don't have to stare at your computer every day. Just understand what to do. So that being said, chose the options route. You have two choices. You buy at the money call options if you don't want to overthink it, you want to play it a little bit safer. At the money call options, at the beginning of the very next month, September 2nd, when we started seeing the signs that we needed to see. Oh, $220 was the at the money option, would have cost you $1,900. Okay. Or because we know it can go all the way to 258, right? We don't want to go over. So the closest number without going over. So rather than picking the 260 strike, instead, I might pick the 250 strike here. The 250 strike is going for $730. Could you pick the 260? Yes, you could. But again, we're trying to make sure that we don't overshoot. Play conservative. All right. That happens. What happens next is this. Within 10 days, Oracle goes from 226 to 328. Coincidence? I don't think so. Why was it not coincidence? Because again, we're seeing this happen. That is the setup. That is the pattern. That's what we know typically happens. And this happens more often than people are even aware of. Okay. And so now it's just a matter of watching our guidelines and our rules and say, hey, this thing can hit 260 easy, 258 easy, I should say. It went beyond what we expected. And look at what happened. That same $2,000 that you put in at the money yielded 10 grand in 10 days. It's not rocket science. This is not predicting the future. This is just literally following simple, repeatable patterns. Okay. I didn't have to stare at my computer every single day. I just knew that once I saw what I needed to see, it met the criteria we want. Let's go for it. Second one option. Because now we say, okay, look, it should at very least hit 250 because 258 is where we think it's going. Well, that 730 option that you bought, now I'm going for almost 8 grand, 10 days. Here's American Express. Same thing. Okay. Same exact thing. Went up, 1, 2, 3, red candle. We know it's going to surpass it. And again, this is not even taking into account what happens after that. That makes sense? Here is Caterpillar. Same exact thing. Boom, boom, boom. Gets there, goes higher. Right? So all we're talking about is just patterns, ladies and gentlemen. That's all we talk about. It's just patterns. patterns that we see. The first thing is once we see that, like we see that setup, let me show you this, okay, like how we see right here. Once you see that setup, rather than questioning, oh my gosh, is it going to go down or anything like that? No, we're looking to see, is it going to surpass that level? Okay, that's all we're looking for. And then if it does, take advantage of that. If it doesn't, you don't have to worry about it. Any questions on this? And again, you can do this on, I prefer this on a monthly time frame. Like I said, it's just so much easier. Um, I don't have to be sitting in front of my computer trying to like scan for stocks like this every single day. All I got to do is just, all right, it's the end of the month, find the ones that I need for the end of the month, you know, jump into the ones that works and sit back and manage the rest. All right. If you want to get started with us, I'm gonna give you guys an offer here. All right. Like I said, there's so many things. So this is our monthly breakout strategy. You can go to this link down here, take advantage of that. Okay. It is a life-changing strategy. And again, it did wonders for me. It's been doing wonders for me. Like I said, I've kept it to myself up until literally last month. Never shared it with anybody. Last month, I decided, okay, you know what? Let me start sharing this with other people. Um, it's changed the trading game for a lot of people. Even the people that I mentor and I coach that have been using this now, nothing but rave reviews. Okay. Um, I think last month when I first offered it, literally, this one that you see here, um, somebody came back and within 2 days, I've made 8 grand doing this. Okay. And again, you don't even have to use options. It's just the idea of knowing that, hey, I know stocks that are going to do well. Okay. Um, what are you going to get? The rules that I personally created to ensure that I can avoid those that would not work. Okay. I kind of give you a hint as to some of those guidelines that I had. Again, stay away from penny stocks because those are not necessarily great stocks. You know, anything can happen to those at any moment. Stay away from stocks that have low volume. We already talked about that. Okay. Stay away from stocks that are bearish, according to our definition of what bearish is. All right. But there's others that we also want to see as well. And that's what I share in this breakout course. Okay. If you want to do even better, everyone that I showed you right now were the ones where, well, you know what? It looks like it's met majority of what we're looking for. Just jump in at the beginning of the month, right? If you want to time your entry better, especially if you're going to be using options, then there's rules for that too that we look for. If you want to know when to exit, or if you should continue riding that wave longer. So you saw how I talked about, you know, the tip of the iceberg is just, hey, we know it's going to the previous month's high, but what about the ones that continue to do even better after that? How do we make sure? We've heard that say many, many times, you know, ride the winners, cut your losers. Well, that's what this is also going to help you with. And here's the beauty of all this. None of this is guessing. Like, it is not a guess. Like, I literally have my 14-year-old son and 12-year-old daughter doing the exact same thing. Okay, so this is not something where it's like you have to have this special instinct or gut feeling, or my kids don't know anything about what's going on in the economy. They don't know what's going on as far as, you know, trade wars are concerned and political, geopolitical issues. They don't know nothing about that. But they can literally every single month when we all sit down and say, hey, let's take a look at this stuff. All right, which ones do you see? My son, his initials, his nickname is CEO. So his initials are actually CEO. So I say, hey, CEO, what do you think? And my daughter, her initials are CFO. You know, so I got a CEO and a CFO. Okay, let's go to our CEO. CEO, what do you have this week? Or what do you have this month? So, okay, these are the ones we're looking at, and we analyze it together. All right, what do you think? And okay, well, all right, CFO, what stocks do you have? Well, I have the same one the CEO has, and these are the some that are different. All right, which ones do you think we want to take on as a family account this week or this month? And I deliberately make sure that I don't tell them anything about any geopolitical stuff. The only thing we look for is there any earnings coming up? That's probably the biggest thing they look for. They might one thing they might look at is the FOMC. That's it. Other than that, nothing else. Okay. And then it's okay, cool. And so then what we do is like, okay, what are the rules? I want to find, I say, out of the ones that you pick, which one, checks all the check boxes, which one doesn't. And if they check all the check boxes, that's what we're going with. Okay. No favoritism, no biasness. There's just these are the ones that meet all the check boxes. Okay, good. We're going for them. I'm the one that usually gets biased sometimes, like, well, but I know what's going on with Tesla. I know what's about to go on with Tesla, but I just keep it to myself. It's all right. We'll just go with what you guys have. Let's go with that. Okay. But again, it's just step by step, yes or no answers. It's either yes, we meet these criteria. No, we don't meet these criteria. And that's what I cover in this course. Okay. How to scan for them every single month. How to go out there, find the ones that you need to find. That's all we're pretty much doing. Fair enough. So the course is $99, not 99, $997. However, what I am doing today, because I did this last month, so I'm going to repeat the same thing to make it fair, is that I said anybody who purchases today will get that even half off. So really, the actual price of this is $19.97. Broke it down to $9.97, and then I said for those who take action today, instead of $9.97 today only though, it'll be $4.97. So if you actually go on there and click on it, let me see if I can do this actually. If you click on that link, let me see if I can do this. Hold on a second. Uh, let's click on this link here. All right. So here's the site. So you go over there. Oh, thanks, by the way, Dave. David actually posted it on there. So if you go on here, you scroll down, you see all this, you'll see it's $9.97. The original cost is $19.97, broken down to $9.97 now. It says this right here. If I click on that, see what it does right here? It's brought it down to $4.97. And that's just for today. I kid you not. Okay. Does this worth doing earnings month? Yes, it does. Yes, it does. So that Oracle one that I showed you, let me show you this. That was because of earnings. Okay. So let's go back here. The one on Oracle. This one right here, that was because of earnings. Okay. And so earnings come, this was the month. That month was in August. September, we knew earnings was coming out for Micron. But again, because we saw that all the rules that we wanted was being applied, what you'll find 9 times out of 10, when all those rules are applied, and it's one of these, the earnings is what actually puts that stock above that level. Okay. And this is one of the few occasions where if it does, then that follow through that you might have 2, 3 months later, you might not get it right away, depending on how much the earnings gap is. So let me show you this. We go back here to the charts. We go back here to Oracle, like you said. All right. So this big move that you see right here, so this is when that happened. Let's go back here to the monthly time frame. All right. So we already started seeing what we needed to see leading into earnings. Does that make sense? So this is September. This is the beginning of September. We saw what we needed to do, started getting in, and then boom, it gapped up. But the gap was so huge, all we needed it to do was come up to this level right here at 258. Right? And going into earnings, I actually posted on social media. Let me see if I can find this. I actually posted on social media. Give me a second here. That this was going to happen. Give me 1 second. Let's move this over here. Let me see if I can open my social media account. Hold on a second. So I posted this prior to the earnings announcement coming out. And I say, hey guys, this is going to be pretty cool. Oracle is going to do well. Let me see if I can find it. 1 second. And then I said, watch what happens. I said, this is going to be a game changer going forward. And again, it's because it's the first time I was sharing all this stuff with people. So let me see if I can find. All right. But in the meantime, any other questions? Where is my page? I'm trying to see. Okay, so let's see here. Give me 1 second. Uh, okay, right here. Let me show you guys this. This posting right here. So this is before the um, this was before Oracle had its earnings, and that's because of what you guys now see here. Testing the new strategy on earnings prediction before the report comes out. Blah, blah, blah. Oracle reports earnings tomorrow after market. Results should be what? Bullish. Okay. So in part, that was what that was. There's a whole nother strategy that I'm also creating that literally predicts a stock gapping up on earnings or not. Okay. So to answer your question, Jay, yes, earnings does help. Does that make sense? But again, going back here. Oops, let's try that again. Slideshow. Uh, yeah. So again, you get this for an additional 50% off if, so I can say if today, and today only, by the way. And so any questions at all? So 497 for today only. After today, it'll be back to the 997, which is still a bargain. I kid you not. Some of those options alone, like I said, I have people who made $8,000 in two days. I have one of my students who doesn't even do any, he doesn't buy the call options. He just sell put options because he knows they're going up, right? And so he just sell puts options and just sit back. $500,000 within the last 4 months, just literally implementing something like this. Well, really, actually, the last 2 months. But he's one of my coaching students. Okay. But this is what you do over and over and over. And every single month, we just wait to the end of the month. So, like now that um, um, November is still, November just started, literally. And this is something that a lot of people are not aware of. There's tons of stocks that are already meeting those criteria. And once the market starts heading back up, done deal. So here's the interesting thing. Even with the pullback that we've seen in the market recently, we know that by the end of the month, some of these stocks, the ones that meet those criteria, are going to be back above that level. So even with pullbacks, it's not really that big of a deal sometimes. Does that make sense? So, but once you understand this, and again, once you know what to look for, you now have a list. And again, if you want to day trade this, scalp this, all that kind of stuff, great things that happens. Okay. So any questions? Any questions at all? I got like maybe what, 2, 3 more minutes left. Any questions at all? This is a phenomenal strategy. And again, not too many people know about this. I kid you not. You know, now maybe people are going to start talking. And you know what? Let me rephrase that. I don't know of anybody who's mentioned something like this. So I could be wrong. Maybe there was somebody that knew about this before. Maybe. Okay. I'm not going to be vain enough to say that it never existed. I don't go out there searching for stuff online, but it's never come across my attention that anybody even knew something like that. Um, so somebody's asking if purchased today, can time be started next year in March of 2026? But what do you mean by that? If purchased today, can time be started next year in March 2026? You can use it anytime you want. Like honestly, anytime. So, you purchase it today, you'll get you will immediately, well, let me not say immediately, you would definitely get it today without a question. Okay. You watch it, and by the way, too. Any questions you have, you need any clarification, you ask anybody who knows me. You send me an email, I'll get back to you. No, there's no time limit once you purchase it. It's a strategy. It's like, once you learn how to do this, it's on you. Does that make sense? It's on you. Once you learn how to do this. The thing is, right now there are stocks right now from October that are getting ready to move in November right now. And then when December comes, there'll be the ones for December, and then that you can take advantage of. So and this is a monthly thing, monthly thing. So, but no, yeah, you can definitely take advantage. Okay, so very good. We do have the slides that you can also use, Dennis, that accompanies these workshops. So you can read the slides without a question. Okay. And I did that on purpose because again, kind of like how you said, I know some people like to read. I'm one of those type of people too that like to read. And so I like to watch, then I read, and then it just makes it, come together. So yes, it does come with that. It does come with the slides as well too. Okay. And then again, like I said, any question, I kid you not, any questions you have, just email me. Okay. You will get the slides as soon as you purchase. So everybody that purchases it will get the slides that comes along. Not the slides that we did here today. I'm talking about the slides for the actual presentation, the actual course itself. Okay. You will get that automatically. Okay. What's the email? Info at Right Side Trading. Thank you for asking that, Teddy. Info at Right Side. So here's our company's name, rightside.trading.com. As you can see right here, just add info to the front of it. So this is our company's name, Right Side Trading. So just put info at rightside.trading.com. And honestly, any questions you have, I'm one of those people who's like, look, it's me. It's my strategy. I'm the one that created this. You know what I'm saying? So thank you, David, for putting that out there. So even if you need, hey, I just want to double check that I'm doing this the right way. Did I understand this correctly? No problem. Send me an email. I have no problem at all. Okay. Believe it or not, when people actually send me emails like this, if it's a question that I haven't answered before, I usually take that and then try to use that to improve the course and even send out to people who've already purchased this as well. Okay. If I feel like that's a very good question that needs to be answered. Any others? Because I got to go. Going once, going twice. All right. Excellent. Check. Thank you. Excellent. All right. So again, once you purchase it, just know that you're not by yourself. Always email me if you have any question. I don't care how many times you email. Once you are now part of our community, if that's the case, so I would answer any questions you have. But let me go ahead and turn it over because I don't want to take up too much of my time here. Um, Questions absolutely given, absolutely. So just ask away, ask away. As many questions as you want. Don't feel bad. Don't feel like you bought because I get some people, oh, I feel bad. No, 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 no. That's what I'm here for. I do nothing else but just tinkle around with indicators, strategies, and answer questions. So feel free to do that. All right. All right, guys, I do have to go. David, Anka, thank you so much. You guys are the best. Appreciate you guys. And for those of you guys that I see that actually purchase a course, I look forward to helping you guys with even more strategies if you need so as well. Thank you so much.